What up, people? What up, everybody? Happy Saturday. It is the Wealthy Conversation section of the Finance Rebel Show. Y'all know every Saturday we do Wealthy Conversations. We break down things that can help us obtain, secure, and generate more wealth for ourselves, our family, and our overall community. But today, I'll be totally honest with y'all. I got thrown off task. I didn't get my bearings. Y'all know I usually get my bearings every morning, every Saturday morning, and I have a cup of coffee. Well, my bearings did not show up today, so I'm a little off kilter. But as always, I won't say that the normal adage, right? But as always, right, one mistake or one hiccup don't stop no show. So do me a favor, y'all. Y'all know we're going to get into this. Today's topic is investment analysis, sectors, and industries. Question of the day is, though, do you know what a sector and industry is? I know a lot of people have a lot of hype about investing, about the stock market. Matter of fact, today's segment was basically prompted by my team, excuse me, or the crew over in the Finance Rebel Academy, which is my group on Facebook. So for everybody that's in the Finance Rebel Academy, I ran a poll. I said, what do y'all want me to talk about this week? And overwhelmingly, I put down investments, I put tax. A couple people put a couple other things like savings, but the unanimous vote, or not the unanimous vote, the majority vote was investment. So here we are talking about investment. So today's topic again will be investment analysis, sectors, and industries. So let me know if y'all know what a sector or an industry is and how they come into play in investments overall. So I just want to speak to my peoples real quick. Listen, I didn't do anything today, y'all. I didn't share this out. So everything is like super duper delete. My man Jose is here. What's up, Jose? How you doing? And I'm late, y'all. So I'm here. All right. So who is Felipa? Let me know if I'm saying your name right. Wrong. All right. So you don't know what sectors and industry is. Okay. All right. So good. Then hopefully this won't be a waste of time for anybody. All right, so Jose comes in. Sectors of industry can be described as where a company does business, such as tech sector or automotive. That's pretty good. Okay, good. I don't like messing up people's names. My name is Kamari. People over the years and all my 40 plus years, my 4+ decades on this earth, love to say my name wrong. And many of them love to say it wrong intentionally. Some of them think it's funny. It's all cool. But, you know, it is what it is. But listen, y'all know the Finance Rebel Show, especially our Wealthy Conversation section, is all about helping to raise the financial IQs of people that come in and watch this show every week. We do this every week at noon-ish. This morning, well, actually this afternoon, we are talking or starting at about 12:30. So I'm a little off, right? A little off. Hey, Alicia, how you doing? Welcome. All right, so I know everybody's probably thrown off a little bit because I'm late. I try not to be late, but here's the more important thing, right? I don't want to miss any shows, so I want to be here for y'all every Wednesday and every Saturday at a minimum. Sometimes the times may fluctuate just a little bit. Miss Shine, how are you, my lady? Good afternoon. All right, so let's get to it. Market rundown. S&P 500 closed at 3,934. It was basically flat on the week, so we really didn't have much gain this week, but this week was actually a pretty big week. All right, so S&P 500, that's how we're measuring the overall stock market. It's the 500 largest companies in the United States. It's actually like 504 companies in the United States. All right, so that was up. Now it is up 4.8% year to date. So market's up year to date. So we're starting off on the good foot. All right. Oil was up 59.73. Probably will crack that $60 level pretty good. And as we see oil rise, we know that's going to impact everybody's wallet and pocketbook. So get ready to get impacted at the pump. I'm starting to see travel starting to pick up a little bit more as the seasons start to change, as vaccines start to roll out. You know, we've been talking about this every week for the last month or two now. So everybody's kind of hopped up off this vaccine juice and people want to get out. All right. Gold. Gold closed at 1824. All right, so gold has been falling as well year to date. A lot of people, especially my gold bugs, say gold is the ultimate investment. I disagree, but it is what it is. But again, it's falling. Things are starting to get a little bit more settled. And Bitcoin. Bitcoin closed at $47,103. $47,103. So Bitcoin is on the rise. Many of y'all know I got called or get labeled the Bitcoin hater because I called the bubble in 2017 when Bitcoin had touched a little under 20,000 and then fell. And I told folks not to invest their savings into it. And so then I get labeled the Bitcoin hater, but I still stand by that. Most people can't survive a $400 savings. Excuse me. Most Americans cannot survive a $400 emergency. But many of us, because we get, what do they call that thing? What do they call it? What do they call it? Glitter, not glitter. Shiny object syndrome. Excuse me, y'all. Shiny object syndrome. So a lot of people get caught in shiny object syndrome and they don't stick to the plan, let alone have a plan a lot of times. So many people are saying, ooh, I want to find this. I want to get involved with this new shiny object, even though a lot of us don't have over $400 in savings to survive any emergency, whether it be a car breakdown, the roof falls in, anything can happen. So many people thought that I'm dissing Bitcoin. I'm really agnostic when it comes to assets and investments. Whatever floats your boat, whatever you think is going to give you the best possible return that is relative to the risk you want to take. I'm cool with it. If you're cool with it, I'm cool with it. But when you start putting your family's financial security in the way, I think it's incumbent upon me to at least say something, to at least whistle and say, yo, that probably ain't a good move, my dude. That's probably not a good move. So that's why I got labeled the Bitcoin hater, but it's all good. I always got to stand on my truth and be transparent. I mean, I show y'all what I invested in Bitcoin. I invested like $45 in Bitcoin and now it's like $160. So I ain't complaining, but I'm not a disciple. I'm not a convert. So it's cool. It's cool. So other things on the rise today. Disney reported earnings this week. 90,000. Again, 90,000 Disney Plus subscribers. Excuse me, 95 million Disney Plus subscribers. The company actually thought it would take them to 2024 just to get 90 million. Why am I messing up these millions? I'm going from 5 digits to 7 to 8, and I'm messing it all up. But Disney has 95 million Disney Plus subscribers. The company anticipated and projected of having 90 million Disney Plus subscribers by 2024. So they clearly beat estimates. They clearly have come in on time. Some of the stuff that they have planned for these new drops are really interesting. I think are going to keep Disney fans and Marvel fans and Star Wars fans in tune for quite some time. So that stock hit an all-time high yesterday. And so the earnings aren't doing that great, but they are positioned to have great growth going forward. So I expect them to continue to do great things. All right. So today's lesson, today's topic, today's conversation is investment analysis. I was going to say security analysis. It's that too, but the topic is investment analysis, right? Sectors and industries. So I asked everybody who knew what a sector and industry was. A couple people said no. My man Jose came in. He got pretty close. But we're going to break that down. We're going to talk about that because I think it's important that people start to understand these basics, start to understand the real fundamentals of investment so they can become really powerful investors. All right, so let me say hello to everybody. All right, so Alicia's here, Talisha's here. Don Johnson's in the building. All right, Adrian's here. Talisha says FOMO. Yes, people definitely have FOMO, fear of missing out. All right. And so Talisha says she's absolutely loving WandaVision. I am absolutely hating WandaVision. I'm a big fan though of the young lady who's playing Monica Rambeau. So she's awesome. She was from Survivor's Remorse, and a few other things. She's a really accomplished actor, and yes, I like her. But I can't get with WandaVision. I can't get with WandaVision because I don't like the writing. I don't like, actually, I don't like the storyline. I don't like the plot. It's taking me all over the place. I mean, I've watched it every week because I have to watch it with the family. Like the family wants to watch it. My son and daughter are absolutely geeked about it. They actually want to stay up till 3 o'clock in the morning and watch the first release of it. And I'm like, it's not that deep to me, but it definitely shows just how impactful Disney is with their content and their overall content strategy. They definitely know what they're doing. They definitely know what they're doing. All right. So let me say what's up to my people on IG. So, the Ivy Investors here. What's up, Courtney? How you doing? Zamira, that's the new global trendsetter right there. What's up, Z? Impossible Bella, how you doing? Cindy, where you been, Cindy? We got to connect. Gil Clinton, how are you? Lock and Key, how are you? Eric Senior, 1975. What's up, bro? How are y'all? How is everybody today? All right. Okay, Miss Edith is in the building over on YouTube. Appreciate that. Elaine, how you doing? How you doing? All right, so Alicia Joy is in favor with me. I hate WandaVision. The whole era that they started in is my least favorite. And it's all over the place. Yeah, I mean, but that's kind of part of it. I guess what Wanda is doing is she really wanted to have a life with Vision, and that got cut short when he got murdered in Endgame, or whatever one of the last Marvel movies was. And so she is so powerful. And for all of you comic book people or non-comic book people, I forgive you. I was raised as a comic book kid. I'm a DC kid, so I kind of nerd out every now and again. So I think she somehow is making this whole thing play out, her vision for what she wanted for her and Vision, no pun intended. So, I mean, I get it. I get it. How many of you all have Disney Plus? Hey, Cynthia, how are you? All right, so Adrian says, I got Disney because Star Wars and all the spin-offs are bae. Yep, I agree. They're not bae, but they're good. they're real good. They're real good. All right, the Taxman 11 is in the building. Sexy M and Below the Radar here. How are you? Welcome, welcome, welcome. What's up, Trey? Trey, you starting to be a regular. You come here more than your dad do. All right, so listen, we are talking about sectors and industries. What is a sector and industry? And so today I am going to show you, where is it? I got to find it, y'all. So I wanted to show you a graph that I have from Fidelity. Now, I'm showing it from Fidelity, not because I rock with Fidelity or I like Fidelity, but I thought Fidelity had a pretty good breakdown of all the sectors and many of the industries. So I just want to show you that real quick. And let me pull that up on the screen. Now, who has questions about what a sector and industry is? Now, I asked y'all what a sector industry is. I got a couple responses. A couple people said no. Some people say yes. So if you are investing in the stock market, you absolutely should know what a sector and industry is, because whatever company that you have belongs to a sector and an industry. All right, so Lock and Key says nope. But I hot that stock though. You like that stock though? Okay. All right. So okay, you're asking about, you're responding to Disney. Excuse me, y'all. So basically you're saying no. All right, got you. You don't own Disney, but you like the stock. I got you. I got you. All right, so let me pull this up on the screen real quick. Give me 1 second, y'all. So a couple of weeks ago, I did a whole thing about the business cycle. I don't know how many of y'all have had a chance to look at that. All right. What's up, Christopher Allen? How you doing? So I'm looking at this one piece of content that Fidelity has. So I just want to share this with you all. Give me 1 second as I pull it on the screen. I apologize for the delay for anybody who's watching on Instagram or listening to the podcast. Hopefully you all have tuned into the podcast, left your reviews of the podcast and your ratings of the podcast. All right, let me blow that up a little bit. So I try to make this as simple and easy and fun as possible. All right, so the business cycle approach to equity sector investing. All right, so when we talked about sectors and industries, we're talking about groups and collections of stocks in the markets. All right, and so here, Fidelity has kind of a business cycle approach to equity sector investing. And so I'm not so much interested in the business cycle approach because we've covered that, but there are some key things here that I want you all to be aware of. All right, so all sectors and all industries have a cycle. All right, so I want y'all to take notes of that. I want y'all to remember that. All right. So when you look here, it says key takeaways. The business cycle, which reflects the fluctuations of activity in an economy, can be a critical determinant of equity sector performance over the intermediate and long term. All right. The business cycle approach to sector investing uses probabilistic analysis to identify the shifting phases of the economy, which provides a framework for allocating to sectors, right? So where to put your money. Should you put your money in financial? Should you put your money in consumer discretionary? Should you put your money into consumer staples? So that's what they mean when saying shifting amongst it. All right. So for example, the early cycle phase typically is characteristic by low interest rates. Sharp economic recovery was then to lead to the outperformance by the consumer discretionary and industrial sectors. All right. Generating outperformance among equity sectors with a business cycle approach may be enhanced by adding complementary analysis of the industries and inflation. All right. So they're talking about asset allocation here. Now, we're not really going to talk about asset allocation here, but that will be a topic for a future wealthy conversation. But here, I wanted to show this here. I wanted to just run through the phases again of the business cycle because it'll be kind of key when you're thinking about different sectors, different industries. Okay. So the early cycle phase, generally a sharp recovery from recession. All right. So I want you to make a note of that. And if you look up here, you see this line here. Those are kind of the cycles. Those are the cycles of the business cycle. All right. Quantitative back, probabilistic, a whole bunch of gobbledygook. Just want to skip over that. All right. So we hit early cycle. We're going to mid cycle. Typically, the longest phase of the business cycle. The mid cycle is characterized by a positive but more moderate rate of growth than the experience during the early cycle. All right. So when you think about cycles, I want you to think about this. In 2008 and 2009, when we came out of the Great Recession, the economy was at a low. All right. So after that, it hit around March 9th of 2009. Supposedly it was the bottom of the stock market and kind of the bottom of the recession there from an economic standpoint. And so that was the low. All right. And so then the next phase was the early cycle, right? That's the phase they went into. If you can think about that or visualize that. And so then everything from there was then what we are experiencing now. So many people feel we are in a late cycle, which often coincides with peak economic activity, implying that the rate of growth remains positive but slow. A typical late cycle phase may be characterized as an overheating stage for the economy. Now, overlay that with what's happening with COVID. So we don't have a typical scenario here. All right. But while we're in a recession, we're not really in what a typical recession would be, if that makes sense to everybody, because companies are still making money. Economic activity has slowed, but the stock market is still on a tear. All right. So I just want all of y'all to kind of have that as a backdrop, Now, when you see here, again, you see here This is a better illustration of an economic cycle. I hope y'all can see that. Can everybody see this? Is it viewable? Let me blow it up just a little bit. All right. So you see the recovery, expansion. They're saying the U.S. is there. Remember, I was saying they're kind of saying we're in the late stage, and then contraction. So, like I said, this is textbook. Y'all got to understand that there's a difference between theory and application, or theory and real world scenarios. So, but I want you to understand the theory, because the theory oftentimes shows its way in some way, shape, form, or fashion. All right. And so then all of these things have characteristics which will typically follow the same suit, and they all impact sectors, industries, and the overall stock market overall. All right. So that's just a quick kind of synopsis, just really quickly. So I want to show you something else. So just bear with me. What's up, Malik? I see you got a question. I will sneak that in. Today we're talking about sectors and industries, but I can work that in, right? Do you know what a REIT is? So it's REIT. REIT is Real Estate Investment Trust. Real Estate Investment Trust. And yes, I know what it is. It's an investment vehicle or investment company that primarily is invest in real estate, right? Some of them are publicly traded. Some of them are privately traded. They all pay dividends because they get tax breaks. In order to get the tax breaks, they have to pay the dividend. It's almost like a 90% dividend payout in order to be classified as a REIT. So they typically pay higher dividend levels than normal. Okay. So give me 1 second, folks, as I switch gears real quick. So here we're going to talk about, again, sectors and industries. What's up, Melanie Allen? How are you? Welcome. All right, so these are sectors, folks. Sectors are just a collection of different companies that kind of follow the same pattern, and they do the same thing that most do. So, for example, Verizon and AT&T would be in the same sector. All right, so here you have. Let me blow this up again. You have roughly 11 sectors in the S&P 500. Now, also just a quick aside. Different. Everybody kind of has their own listings, right? So S&P 500 is the most popular. That's just how they classify the investment world. All right, that's how they. Sorry, y'all. Somebody was calling me. That's how they classify the investment world. Dow Jones classifies it very similar, but there might be some different tidbits here and there. All right. I'm trying to think of some other ones. So basically, it's all these information services, for the lack of a better term, that kind of classifies and breaks down all the investment industries, either from a stock perspective, from a bond perspective, or some other kind of not strategic, or some kind of hybrid fashion of investment they might have, right? So you have 11. Now, y'all let me know if y'all can see this. I'm going to try to blow it up a little bit better. Going forward, I want to start doing full-fledged slideshows so y'all can see all the information. If anybody is a good PowerPointer or Google Sheeter, let me know, because I'm definitely what these about. All right, so communications is a sector, consumer discretionary is a sector, consumer staples is a sector, energy is a sector, financials is a sector, healthcare is a sector, industrials, information technologies, materials, real estate, and utilities. Now, depending on, again, some of the sectors, real estate sometimes is all under financials. So it really depends. So I don't want you to get caught up too much in the nuance. Just understand that all of these groupings tend to have the same characteristics. They tend to move in the same way. They tend to react to news or economic activity in the same way. So let's look at consumer discretionary. All right. So, great. They have an outline here. Consumer discretionary, the consumer discretionary sector encompasses those industries that tend to be most sensitive to economic cycles. Its manufacturing sector includes automotive, household, durable goods. So those are like the big things like washers and dryers, textiles and apparel, and leisure equipment. The services segment includes hotels, restaurants, and other leisure facilities, media production and services, and consumer related. So can anybody think of a consumer discretionary company right out the top? All right, so you see this here, it says S&P 500 index, and then it says consumer discretionary. So the S&P 500 has a consumer discretionary like list that they track, and they are tracking this list here from 2/11 or February 11, 2020 until now. And so for the most part, all the stocks that are in the in the consumer discretionary sector, have outdone the overall stock market or the overall S&P 500, which is this light blue line here. I mean, all of this is done to see who's moving better in the economy or who's moving worse in the economy. All right. So you can kind of have a better gauge of how things are going, right? But everything goes through cycles, all of it. And so here it talks about the overall average of the PE for the sector, which is 92. Y'all know Alton loves to ask me about PE. Right. And thank you, Jose. So two very big consumer discretionary companies will be Target, which is ticker symbol TGT, or Walmart, which is ticker symbol WMT. Now, I'm glad you brought that up, because sometimes some companies will straddle or be in more than one sector at a time. I'm almost certain Walmart and Target are in more than one sector just because of all the stuff they sell. All right, so here you get kind of an overall baseline of what, as a group, the average is. So, right, the average dividend for all the stocks that are in the consumer discretionary bucket or sector is 1.45. All right, so I hope everybody can see that on the screen. All right, now there are industries, right? There are industries that come beneath the sector, right? So sector is like the 50,000 foot view, and then you have industries. But I don't want to go into that. I want to stay on the sectors for the most part. All right, so consumer staples. The consumer staples sector comprises companies whose businesses are less sensitive to economic cycles. All right, so they're less sensitive. It includes manufacturers and distributors of food, beverage, and tobacco, and producers of non-durable household goods and personal products. It also includes food and drug retailing companies, as well as hypermarkets and consumer superstores. All right, so who would be a consumer staple, y'all? Anybody know? Does anybody know? Well, Alton, we gonna stick to the 50,000 foot view. We got a syllabus we working on. I'm the teacher today. All right, so yes, Apple would definitely be cross sectors sometimes. Billionaire Ground 40, how are you? Love Earn, how are you? I won't say your name right. Andy, how are you? Tiffany Alora, how are you? Welcome. Happy Saturday. All right, so Jose says consumer staples is a consumer staples. All right, come on, let's hear from some other people, y'all. What y'all got? All right, so keep that in mind. All right, so we want to keep rolling through. We got 11 sectors to get through. All right, energy. Everybody should know what energy is. That's the easy one, right? Energy. The energy sector comprises companies whose businesses are dominated by either of the following activities: the construction or provision of oil rigs, drilling equipment, and other energy-related services and equipment, including seismic data collection. Say that 5 times fast. All right, companies engaged in the exploration, production, marketing, refining, and or transportation of oil and gas, coal, and other consumable fuels. It's funny how they don't talk about any of the renewable energies, right? So I bring it up to say that everything doesn't always get captured by these 50,000 foot view top level sectors, but for the most part it does. Now, when we look at energy, right? Energy dividend yield for the sector is about 6.6%. Now, does anybody think that's sexy or good? Oh, Loving RN, doing good. All right, I'm sorry, Loving RN, how are you? Cabby 333, how are you? Okay, all right. So right now, again, energy pays a dividend on average of 6.06%. Energy's also been severely hurt because of the lack of economic movement and activity, right? Nobody is, again, in airplanes, trains, and automobiles. So keep that in mind, y'all. Keep that in mind. Fred B, how are you? All right, so financials. Most of y'all got bank accounts, so y'all should know what financial sector is. Low key popping, how are you? Welcome, welcome, welcome. All right, so financials. The financial sector contains companies involved in activities such as banking, mortgage finance, consumer finance, specialized finance, investment banking, and brokerage, asset management, and custody, corporate lending, insurance, financial investment, real estate investment trusts, as well as companies engaged in real estate management and development. All right. So that's another one. So you have to, you want to understand what you're investing in, what sectors they're in. All right, healthcare. Everybody should be able to discern what healthcare is for the most part. Now I'm gonna throw a little twist in there for y'all just to see if y'all paying attention. All right, so the healthcare sector comprises two main industrial groups. All right, so they got two industries that make up healthcare. So the industries ultimately make up the sector, if y'all been paying attention. The first includes companies who manufacture healthcare equipment and supplies or provide healthcare related services, including distributors of healthcare products, providers of basic healthcare services, and owners and operators of healthcare facilities and organizations. The second regroups companies primarily involved in the research, development, production, marketing of pharmaceuticals and biotech products. So, what sector is Johnson & Johnson in? For the most part. How you doing, Talton Hall? Welcome, welcome, welcome. How you doing, Tiffany? Welcome, welcome. Fred, peace to you as well. All right, so Black Women's Wealthy, how are you? Happy Saturday. What are you working on? We need to do a show together. Tell you a story. All right, next sector, industrials. All right, so Talton Hall got it. He said healthcare for J&J. All right, so what sector would Merck be in? I gave it away to y'all, but I want y'all to think about this, right? So sometimes sectors are bigger than what they are. Now, they said that it was pharmaceutical, but when you think of pharmaceutical, a lot of times people don't always think healthcare. Usually when people think healthcare, they think hospitals. They think doctor's offices. Yes, pharmacies or pharmaceutical companies make the drugs that the pharmacies make and the doctor prescribes, but a lot of times people don't think about it. All right, so industrials, the industrial sectors. Before I read this, can anybody guess an industrial company? There was a really, really big one. All right, so industrials, the industrial sector includes companies whose businesses are dominated by one of the following activities: the manufacture and distribution of capital goods, including aerospace and defense, construction, engineering, and building products, electrical equipment, and industrial machinery, the provision of commercial services and supplies, including printing, employment, environmental, and office services, the provision of transportation services, including airlines, couriers, marine, road and rail, and transportation infrastructure. So can anybody think of one? All right, y'all rolling today. Yes, Tom. So biotech makes medicine. Absolutely, they do. and Cat make some. Oh, look at this. Thank you, dear. I finally got my bearings. I told y'all my whole day was thrown off, so my person must have came late. I'll read it later. Baby. John Deere. Yes, John Deere is definitely industrial. CAT, C-A-T, stands for Caterpillar. Caterpillar is definitely an industrial company. They make the big equipment, right? GE is another industrial company as well, but GE makes so much stuff. All right. And BA is Boeing, and I want to say CCL is Carnival Cruise Line, but I'm not sure. Oh, thank you. Do me a favor, put that in the refrigerator for me, please. Thank you. So the family is bringing me back. My daughter just brought me back. Well, by the way, my daughter just came home from work. Right? So my daughter works, and they went and got me some food, so they know I need my vittles, y'all. All right, so I believe CCL is Carnival Cruise Line. Jose, let me know if I'm right. Fact check me on that. I can't get them all right, y'all. I get close to a lot, but not all of them. All right, so that's industrials. All right, information technology. Can anybody guess what's in information technology? All right, information technology covers the following general areas. Firstly, technology, software, and services, including companies that primarily develop software in various fields such as the internet, application systems, databases, management, and or home entertainment, and companies that provide information technology consulting and services, as well as data processing and outsourced services. Secondly, technology hardware and equipment, including manufacturing and distributors of communications equipment, computers and peripherals, electronic equipment and related and instruments. And thirdly, semiconductors and semiconductor equipment. Okay. So again, underneath info technology, I'm sure y'all can guess that. Yes, Charles. Now, I don't want to say your name wrong, but is it Zulika or Zulika? I'm really curious about that. Dope name, by the way. Okay, and I got CCL. CCL is Carnival Cruise Line, everybody. Yes, Microsoft is definitely an infotech company. All right. Brad Models, how are you? All right, so listen, everybody, for all of y'all who are just joining in, I'm Kamari Ellis. This is the Finance Rebel Show. I'm Kamari Ellis. You're watching our Saturday edition. Every Saturday, we do wealthy conversations starting at noon or noonish, somewhere around there. But every week, we have a conversation about wealth, how to get the money. By the way, y'all, wealth isn't just about money. I focus on the money part, but every now and again, I love to bring in people to interview and have conversations because wealth really is a holistic thing. All right. Your health really is the greatest and true wealth, right? Because you can make all the money in the world, but if you're not healthy enough to spend it or enjoy it, what point is it? All right. So just keep that in mind, y'all. Wealth is a holistic thing, whole life, whole body. Zulika. All right. Dope. Zulika. Thank you. All right. And so Elaine said Apple. All right. Yep. Apple is definitely infotech. And Talton said Microsoft is my baby. My baby love plus Apple. Apple plus Microsoft. Now here's an interesting fact. I want to know if anybody knows. Apple or Microsoft, which one of those companies helped save the other? Which one of those companies loaned the other company some money to bail them out? Does anybody know which one it is? All right. All right. So infotech. All right. So we're almost done in the sectors. Materials. Anybody know what materials are? All right. So the materials sector encompasses a wide range of commodity-related manufacturing industries. Included in the sectors are companies that manufacture chemicals, construction materials, glass, paper, forest products, and related packaging products, and minerals, and mining companies, including producers of steel. All right, so it looks like Malik got it first. Microsoft saved Apple. Right. So check that out, right? Microsoft, right, Jose. Microsoft saved Apple. So I just want to make a quick point here. And I think y'all might be cheating because I might have mentioned that in previous episodes. But they were rivals and they still loan the money. Why do y'all think that is? Why do y'all think that is? Yes, LG is an industrial company. All right, so we're talking about material. So who do y'all think is a material company? And I know I got a couple questions going all at the same time. By the way, I didn't put that up on the screen. So let's go get back to business. All right, so last one was materials. Nobody has chimed in what kind of company is material company yet. All right, real estate. The real estate sector. Now, remember, real estate or REITs were mentioned somewhere else. Now, Malik asked about REITs earlier. All right, so real estate is a whole sector for the S&P, from the S&P standpoint. The real estate sector contains all REITs. Again, REITs spelled R-E-I-T, lowercase s, right, for the plurals. REITs, real estate investment trust, with the exception of mortgage REITs, which remain in the financial sector. Additionally, the sector includes real estate management and development services. Can anybody think of a company that is in the real estate sector? Now, nobody has given me a company that's in materials yet. I ain't forget, y'all. I'm keeping track. I need y'all to keep up with me. Who y'all got? Who y'all got? So Malik says Steve Jobs started at Microsoft and he wanted to build a business that would rival. No, they didn't start it. He didn't start at Microsoft. They both, actually, Steve Jobs and Bill Gates both got their idea from Xerox. A lot of people don't know that. Matter of fact, Apple, I want to say Apple incorporated first before Microsoft. Somebody double check me on that. All right, so International Paper, Tiffany said. Plytex, I think I know Plytex, but I'm not sure. Yes, REIT equals real estate investment trust. Thank you, Talton. And 3M. 3M is big in chemicals. All right, and so the last one we have is, you know what, Barry? I think you might have stumped me. I'm not sure if Century 21 even makes it into a sector. I don't know if it's big enough, but I don't know if a brokerage would be, I don't know if it's a big enough brokerage to be a publicly traded company. But I was going to say Toll Brothers, if anybody knows about Toll Brothers or D.H. Horton, I'm pretty sure are in the real estate sector. So when we talk about sectors, right, we're talking about companies that are publicly traded on the stock market. So I'm trying to see now. Yeah, I'm almost certain Century 21 is not a publicly traded company. All right, so utilities. Can anybody name any public utilities? All right, so utility sector encompasses those companies considered electric, gas, or water. Utilities or companies that operate as independent producers and or distributors of power. Can anybody think of one? We still haven't gotten anybody for real estate. And two, what utilities you all can name. Now, what are the things y'all been wanting to talk more about ETFs? So there's a reason why I even brought up sectors and industries today, just to kind of give you all a little trick into that. There are ETFs out there that are broken down by sectors. There's a financial ETF. There's a utilities ETF. There is a consumer staples ETF. There's a consumer discretionary ETF, right? So you can really develop a whole investment plan based on sectors. Now, guess what? You could also develop a whole investment plan on utilities as well. So utilities are, again, the subgroups underneath the sectors. So for example, under utilities, you'll have electric utilities, you'll have gas utilities, You'll have water utilities. Like, so anybody from Philly, y'all know we got Exelon or Pico, right, which handles all of our electrical needs in the city of Philadelphia. When you get outside the city of Philadelphia, Pico also handles electricity and gas. All right. So in the suburbs of Philadelphia, Pico does that. But who is Pico owned by? Pico is owned by Exelon. Exelon is a utility. Okay. I want to say they are headquartered out of Chicago or based out of Chicago. Okay. So when you think about that, you're always paying your utility bill. Utility bill probably isn't going anywhere anytime soon, because a lot of times the government won't even let you go off the grid. That's a whole other conversation, but I don't have time for that one today. But just know a lot of times you are not allowed to go off the grid. All right, so nobody has given me a utility yet. Let's see. Yep, PSE&G. And I believe PSE&G is a publicly traded company as well. Most of the big utilities are publicly traded. Now in Philadelphia, we also have PGW, which is the gas company that's owned by the city. It's a city-owned municipality. The city also has the water utility that's also owned by the city of Philadelphia. Now, American Water is pretty big in the suburbs of Philadelphia. That is actually a publicly traded company or publicly owned traded company. All right. Tiffany's on the job. Duke Energy is another publicly traded utility as well. Zulika says Zillow for the REIT. Well, no. Zillow just does, they're not a REIT. They're like a brokerage. And actually Zillow just released earnings this week. They had a really good earnings report as well, as an aside, but they're more of an internet service that is actually looking to destroy real estate agents. I don't know if it's going to happen anytime soon, but clearly the writing is on the walls. They're definitely there to change that industry. But you know what? Let's pull Zillow up, because I think that would be interesting. Let's pull that up. Malik just brought up Gilbane. Gilbane, I want to say, is definitely a real estate construction company. And I definitely believe that they are publicly traded. So, like I said, I'm going to pull up Zillow. Give me 1 second. All right, so y'all kind of got the basic overall of sectors and industries. I didn't want to go through all the industries because we would be here all night. But you all can start looking at that and say, wow, within financials, what do mortgage REITs look like? Within materials, within industrials, what does defense look like? Right? Because military spending isn't going to stop. And again, the Biden administration, Joe Biden, just announced that they want to make sure they transition all electronic vehicles, all federal government vehicles to electronic vehicles by, I forget the year, but it's really soon. And that is roughly a fleet of over 600,000 vehicles. So which one of the companies in that industrials, because that would be an industrial company that's going to handle that, which one of those companies do you think could potentially profit from that? And would it be enough profits to even make the profits of a company's needle move? All right, but here's Zillow. All right, and y'all always tell y'all you can get a quick overview of what a company is doing or where they are. Just go to finance.yahoo.com, go to profile. They'll tell you who they are. They'll even tell you what sector they're. All right. But Zillow operates a real estate brand on mobile. And the web in the United States, it operates through three segments: homes, internet, media and technology, and mortgages. The company's platform offers buying, selling, and renting and financing services, right? So they are even in the financial services sector a little bit for residential real estate. So remember, I talked about, again, straddling. It also provides a suite of marketing software and technology solutions and advertising services. The company's portfolio of consumer brands, right? Consumer brands consist of Zillow, Zillow Offers, Zillow Home Loans, Trulia, Street Easy, High Pads, Naked Apartments, and Out East. And business brands for real estate, rental, and mortgage professionals include Loop, Bridge Interactive, and New Home Feed. Zillow Group was founded in 2004 and is headquartered in Seattle. So they're not actually in the business of the brick and mortar per se, of actually they're in the business of selling the brick and mortar and getting financing for the brick and mortar, or finding tenants for the brick and mortar. So, it's a little different. It's a little different. I know sometimes it might get confusing. So I'm trying to see if Gilbane is public. I was thinking they were, but it looks like they're not. All right. But again, does everybody kind of have a better understanding of sectors and industries? So real quick, let's look at something real quick. Give me 1 second. While we're waiting, go ahead and throw any questions you might have. This is a great time to answer some questions. And the time is 1:30. All right, so we're clocking in at about an hour. All right, so let's see who else has joined us. Bones98, how you doing over on IG? Feeling so lady, how you doing? CMC Phoenix, how are you? I am Nichelle Nichols, how are you? NCG Philly, how are you? Welcome, y'all. Happy Saturday to everybody just joined. All right. So remember when I said you can devise a whole portfolio strategy by just using sectors and industries? All right, so just wanted to show this real quick. This is ETFDB. They are a blog site or informational site on the web that basically covers everything that's going on in ETFs. All right, so on ETFDB, they say there are approximately 33 ETFs that are within the financial space. So if you wanted to create a whole financial strategy, you could do it. And they list out all of them here. So your biggest ETF, your biggest financial ETF is XLF. It's got $29 billion in assets. The second biggest is Vanguard's financial ETF, which is VFH. Again, VFH. Let me blow this up for y'all so y'all can see. Try to see it a little bit better, so nobody has to go and grab their readers. All right, and then the third biggest is the S&P 500, the S&P Bank ETF, so KBE. And so a lot of these are different. You even have a regional banking ETF, which is KRE. Again, all of this is for educational and informational purposes only. This is not investment advice. This is not a buy or sell recommendation for a stock or an investment. Again, just wanted to show y'all some things, right? So you can go from regional banks to pure banks to financials. All right. There's some others that have European financials, right? So that's just for financials in Europe. You can buy an ETF that's just for insurance ETFs. All right. Then there's another one for regional. So you can get really, really specific and really, really laser focused when it comes to developing a portfolio using an ETF. And the beauty about it is you may say, you know what? Banking's still strong on a regional play, but I'm not sure how the bigger banks are going to fare it out, how they're going to wind up. So you might just want to buy a regional bank ETF, and you can start there. Or you can say, you know what, insurance is always doing good because usually they're so good at their actuary functions, basically calculating how much money they need to charge for premiums, how much money they're going to have to pay out for damage or for death or dismemberment or anything like that. But insurance money's basically make money unless they do something really, really wacky. All right. My Productions, how you doing? Desi 306, how are you? Welcome, y'all. All right. So like I said, you can really, really, really get down and dirty when it comes to investing in different sectors. And you may find companies that you may have never even thought of. All right. So let's start here at the top with XLF. So some of the holdings in XLF, we know the usual suspects are going to be your Wells Fargo, your Bank of America, your JP Morgans, your Berkshire Hathaway, your Citigroups, right? Your Goldman Sachs, your BlackRocks, your Amexes, Charles Schwab's, Chubb. Now, remember this, Chubb is an insurance company. So this is the whole collection of companies and financials. Now let's go to an insurance. Yeah, here we go. Here's an insurance ETF. These holdings are going to look way different. So you got Bright House, you got American Financial, you got Assured Guarantee, right? You got MetLife, Cincinnati Financial, Willis Towers, Lowe's Corporation, Hartford, right? So again, those may be companies you've never even heard of before. So you can really expand your investment universe just by having a little bit of extra knowledge to do some things. All right. So I think I showed y'all sectors and industries pretty good, but y'all tell me, do y'all get it? Do y'all understand? Do you have questions? What else you got? Melian, thank you, sir. While you're waiting, like the video. Thank you. Yes. Y'all know I'm fighting the algorithms. The algorithms don't want me to be great. So yes, please like the video. Share the video as well. Comment on the video. It's okay. We talking sectors today, Malik. So I'll say this. They say silver is the poor man's gold. Silver has been running because gold has been running for the most part. Some people like it. It could explode some more. It's definitely been on a run. I think silver's at like 23 or 24 right now. I gotta look. It's I guess also what I'm trying to say is that I really don't have any real opinion, like yay or nay, like or bad or good when it comes to various investments. They're all good. They all do their thing. The question is, does their thing coincide with your thing? All right. So, all right. So Alan says Prudential is great. I didn't say that, and they play a great dividend. All right. Alan says copper is good, necessary for EV. Yep, it is. It is. All right. So did y'all get it? Do y'all understand what I'm saying? Can y'all use this in your daily investments, weekly investments, monthly investments? I look at both, Barry. I look at both. It depends on what I'm looking to do, right? So let's say something economic is happening in the world, and I know that it's going to affect banks. So for example, if and when, whenever this may happen, the Fed Reserve decides to increase interest rates, that should positively impact banks. So instead of buying XLF, which is the biggest financial ETF, I might just want to buy a straight banking ETF, right? I might just want to look and again, try to get really specific in areas that I feel that are really good. again, another one, for example, I don't know if there's an ETF for this, but this is an example, right? We know everybody's talking about EV right now. Alton just talked about it as well. At some point, as EV gets bigger, we'll see ETFs dedicated towards it. Matter of fact, I think there is an ETF dedicated towards it. I can't think of it off the top of my head. We'll see ETFs dedicated towards them, but there's going to be all different kind of EV, right? You got the batteries, you got the manufacturers, and then when we grow out EV, again, I talked about this the other day. Who is going to do the servicing, right? Who is going to build out all of the charging stations? So that's going to be really, really interesting, and actually, that's a sector I'm really interested in as well. So, you could do a lot of different things with this, but yeah, I look at both. For example, right now I'm looking at the economy, I'm looking at the market, and I'm like, we're definitely overextended. We're definitely into that late stage of things. But now when we have infrastructure, right? That's why I always tell people politics matters when it comes to wealth. We got infrastructure spending coming online. We got the vaccines going on. The vaccines will possibly more than likely lead towards more travel, right? So that means more money for gas and oil. That means more money for airplanes or airlines. That means more money for cruise lines, maybe. I mean, people are taking cruises down anyway. People are still traveling now, but it's not as much as they were before. So that's more money that's going to be circulated into those industries. And so we haven't really hit the true depths of what it was like in 2008 and 2009 when everything kind of hit the fan. So we're still kind of good position, and the new round of stimulus is coming. So with the new round of stimulus coming, that's going to be more money spent. So, I'm looking at the overall market going to continue to run. There will probably be more spots that will run more than others, like technology has been running forever. But, everything kind of has their turn. So I'm looking to see what's going to be next. All right. So again, you can do both. All right. So you're getting it. All right. Great. Oh, I'm glad I didn't lose y'all. Cynthia Stanley says, thanks for the great education. I will watch again to make sure to stick. Okay. All right, cool. We'll say that they are good long-term investments. Silver? Is that you're talking about silver? I don't know. I mean, silver's been on quite a run for right now, and silver tracks so hard to gold. It has a strong correlation to gold. So I'll say this. If you want to invest in silver for the long term, I probably will buy the coins. I will probably buy the coins because there's two factors to it. You get the potential price appreciation of silver, and then you also get the collector's kind of portion of it, because it's two factors when investing in coins. The rarer the coin becomes, the more expensive the coin goes. But it's all good. All right, so Jose says, I took advantage of sector ETFs when I decided to self-direct my retirement funds. Oh, so in your company's 457 plan, they have ETFs, Jose? No, Barry, I don't think cannabis is too risky now. I don't. Some people do. I don't. I think now's the time to start getting into it. I wouldn't. So I wanted to talk to you about this earlier, but I kind of forgot about it. I wouldn't get into the crowd, right? I wouldn't start following the crowds. I would care less about the crowds. And I would look to invest in marijuana overall as an industry. I just say buy the ETFs that are covering marijuana. I wouldn't really even try to get into any of the stocks, the Tilrays, the Alfreas, any of them. I would just buy the ETFs. So that's my thing on it. Now, I was talking about this, and let me pull this up. We can talk about this right now. Give me 1 second. Oh, while I'm looking for this, y'all, I have come out of retirement from blogging. I just wrote and released my first blog today. Tax season is here. So I wrote it, 9 ways to make 2021 tax season less stressful. Again, 9 ways to make the tax season of 2021 less stressful. maybe I'll come back and do another video on that, and I'll share this definitely in the chat so you guys can check it out. But I wanted to look at something real quick. Give me 1 second. Oh man. Oh, bringing up tax season. Are y'all ready for tax season? Y'all got y'all stuff together. Don't be going to y'all tax pro at the last minute talking about something. Can you hook me up? And don't be out there trying to get the biggest unlawful refund you can get. Only try to get the biggest lawful tax refund you can get. We don't have time. We don't have time to play penitentiary chances, folks. Y'all know we get picked on more than everybody else. So let's not intentionally give people a reason to pick on us. All right, give me 1 second. You don't see an option to comment? You just commented. What's going on, Steve? How you doing? Steve's a tax man himself. All right, so I want to show y'all this. About to pull it up now. What did you want to? You don't see an option to comment on what, Steve? MJ ETF for Mary Jane. Yep. All right, so I'm pulling up Tilray because Tilray went crazy. I own like 8 shares of Tilray. All right, so just in full transparency. Let's see here. So there were some things going on with Tilray this week. Now, I've been looking at Tilray. Again, if y'all been rocking with me for a minute, y'all know I've been talking about Tilray about a month after it IPO'd back in 2018. And so I saw it go up. It hit 300 years ago. Hit 300. Started out at about 22. Hit 300. And then I saw it drop to about $4. And I said, okay, I don't think the stock is going to go any further. Now, fast forward, and I brought like 8 shares. I'm actually kicking myself, right? Here's 2 lessons here. You're going to lose money in stocks by 2 ways. Either you'll literally lose money or you will miss an opportunity, right? We can't get all the opportunities, y'all. It's impossible. It's impossible to get all the opportunities, but you try to get the ones that you can get and then keep it pushing. Don't get greedy. I remember pigs get fat, hogs get slaughtered, all right? So don't be in such a chase to get too much. So with that said, I knew that Tilray was going to pop again. However, I didn't know it was going to pop the way it recently did, to be totally honest. All right, so right now we are looking at a daily chart, and this is a bit small. Here, I want to blow these up a little bit. It's a little better. They get a little small sometimes. So I started buying in around, I saw around 4, and I waited and I missed it a little bit. Then I started buying around 7, and ultimately I got about like 8 shares at like $11.50 as a total average. I should have bought 100 shares, but I forgot about it, to be honest with you. I brought this in my Robinhood account, and I only put the money in there that I had at the time. And so it was like the only cash I had in there. So it was enough to buy like 8 shares. Now, y'all see on January 21st, on the 15th, it was $21.58. So that's where I had the ticker, the little crosshair there. Then come down, keep coming down. February 21st is $25. Starts to move. Keeps going. We get to February, I'm sorry, not February 21st. I looked at it wrong. On February 1st, on the 2nd, on February 2nd, it was like $24. Come to February 8th, it gets to about $30. February 9th, it closes that day at $42. And so I'm watching it. I see it on the 10th, which was on Wednesday, I believe. It closed at like $62, $63. Yeah, it closed at $63.91. Now, that date is key. February 10th is key. Because on February 10th, that Wednesday, I saw that the Reddit community was involved in this. And so what did I say? I said, Self, the Reddit community loves to pump and dump. They haven't really been classified as such. But when you go back and when you look at the GameStops, the AMCs, the Nokias, all of their stocks have fallen. So on that day, I said, you know what? I want to take half of my position off the table. So I took half my position off the table. It was only like $300. It's chump change. All right. But I sold it out. I didn't let fear and greed consume me. Because again, I always tell y'all that fear and greed are always on showcase in the stock market. And so when people are asking about the hot stock, the stock that they didn't do any research for, the stock they're just trying to ride somebody's coattail on and get some free money, is all about greed. All right. We want to be informed investors, educated investors, and wise investors, emotionally intact investors. All right. So that day I sold 4 and I sold at around $62. Now, in the aftermarket, this sucker hit like $75. But then the next day it fell. And so that stock that was once $63 is now back to what, 29? Yeah, $29. Closed $29 on Friday. So the moral of the story is when you see something funky happen and you get a big pop to the upside, take your profits, folks. Take your profits. And we're seeing all of these pump and dump scenarios that are in place. So now what I can do is again, it was only 4 shares. It's not Jay-Z money. It's not Puffy money, but I can take that profit. I can buy back in now if I want to at a lower rate. Because I don't know if it jumps back up to 60 or 63, but that I got my profit and now I can reinvest, right? But the key thing is not to be greedy and not to be fearful. Keep your wits about you, all right? Because again, I asked some people, it's like, oh, should I sell or should I keep it? It was like, keep it. It's going to keep running. No, everything reverts back to the mean at some point, folks. Everything reverts back to the mean at some point. Yes, Alton, I did. I definitely took some profits. All right. So again, I'm a for that position. I wasn't a long-term investor. There's another account where I had some Torah in it. And it's just rocking out, doing what it's doing. But in that account, I just kind of, in my Robin account, I kind of play around in it a little bit. But I always tell y'all that I really talk to the beginners, and so I try not to do a whole lot of intermediate and advanced stuff with y'all, but I thought that was something that would be good for everybody to understand because, again, we're always kind of looking to follow the crowd. We don't want to follow the crowd. We want to do our own thing. We want to blaze our own trail. Get your own money. Let them Reddit people do what they're going to do. They're great to initiate things. So always be aware of what's going on. Look at the patterns of what's going on. Anybody know where AMC is now? The AMC come back? What about GameStop? The GameStop come back? Let's see, real quick. I know we're talking about sectors today, and I'm a little off task, but since I brought it up, let's look at it. Am I reading that right? So GameStop is back to $5.59. I think it hit like 20-ish, 18-ish. All right. And GameStop, big bad leader of them all, who was once at $300, 300 plus, 483 was at 483 is now trading at $58. So hopefully there's a lesson in all that. And so today it is February 12th. Let's say the GameStop mania started around January 21st. But it's pretty over now. It's still higher than what it was because it started at about $18 for the year. But it's still higher than what it was. But of all those people that brought out 100, 150, 200, 250, 300, 350, somebody got caught with their shirt off. Somebody got hit, right? And all of that could have been avoided. All of that could have been avoided. All right, so I'm about to wrap up, folks. Any questions, any comments, any concerns, go ahead and throw them in now. I'm dying to get to my foods, and I got some other work to do. I got an article coming out, though, and another video, too, talking about culture vultures amongst us. So once I get that, I'm going to share it with y'all. I would love to hear what y'all have to say about it. So, yes, I did. Cynthia says, I've been in it for the long run with the stock back in August that I mentioned. It was 22 then. It's 80 now. It was apps. Yep. I think I remember you talking about that. Right, that's a digital turbine one. Yep. I remember that. Ernie Jones, how are you? Godwin's 98, how are you? Being our treats, how are you? Welcome. Ernie says, love so much. I appreciate the love. All right, so Adrian says, I have 5 shares of Tilray, and I should have cashed out, but I'm holding long term. That's fine. Right? And here's the other thing I could do, right? And actually, I have done. So I had some gains at Tilray. I can take and put that money into MJ. Potentially, right? Because I don't know where the sector is going to end or that industry is going to end in the long run. I don't know that Tilray is going to be the winner or the Alfrea or, oh man, what's the other one that starts with an A? There's a couple of them that start with an A. Some of the big leaders in the field, I don't know if they're all going to shake out and be like that 10 years from now. That industry is still up for grabs. And ultimately, I think big companies, which are already doing it, are going to continue to come in, continue to plant their flags, continue to position themselves. And all big money will own that industry at the end of the day. All right. So, all right, folks. I hope y'all got some value out of today. If you didn't, let me know. If you did, let me know. All right. Do me a favor. Join the text community. All right. All you got to do is text 215-974-0058. Again, 215-974-0058. That's where I usually release everything first. And then it usually goes to the group, the Financial Rebel Academy, which you can find on Facebook. I'll be releasing some things coming soon. And I'm looking to get some of y'all's input on what y'all want to learn about next going forward. By the way, I have not forgotten that we are supposed to start going over the Buffett investment letters. So, or the annual reports for Berkshire Hathaway. So we're still going to do that. All right. When a person invests inside their Roth IRA, is all their gains tax-free? Yes, tax-free. Yep. And dividends. Yes. What about the money to deposit into it? Yep. It's all tax-free. Now, there is a rule, though. 5 years. Right. So in exchange for, because the government, remember I always tell y'all, the government is incentivizing y'all through the tax code to do things that will be financially and economically beneficial for you in the long run. So 5 years, you have to keep the money inside your Roth IRA for 5 years to avoid any taxes. So when you do it, make sure it's a long-term thing. All right. So Malik says, do you think buying airline stocks is a good thing right now? I'm not sure. To be totally honest with you. It could be. The airline ETF may be better. I know there's one out there. But I'm not sure. And Edith asks, Stephen, were you present for the student loan doctor last week? The student loan doctor wasn't on here with me last week. Student loan doctor was on here with me. Oh, it's been a minute. I want to say in August. I want to say in August. So I'm not sure. Y'all might be having a side conversation because Sonia is always wanting to pop in somewhere. She's always doing something. But all right, everybody, listen. Everybody have a great, great Saturday. That's a good one. Mid-Atlantic says tax lien investing. Okay. I might get somebody to get on with that one. But everybody have a great Saturday. I appreciate you all being on here. Remember, every Saturday we are here at noon. Every Wednesday we are here at 8. Do me a favor, share this with someone. Like the video because y'all know I'm fighting the man. The algorithm, they don't want me to be great, y'all. So do me a favor, share this out so we can grow our community and we can help more people positively. All right, y'all. Everybody have a great day. I'll see y'all soon. Blessings.